We're 2 hours into trading. It is Thursday, May 6th. Hello, traders. Let's start off with yesterday's pick. Let's take a look at the market. Let's find some trades for today. I hope all of you go back and watch my previous videos. If you're new to the YouTube channel, go back and watch the last 5, 6, 7, 8 videos. I start all of them off with my pick of the day and a review of what I had done the previous day so that you can get a feel for the track record. More importantly, you can get a feel for how successful the systematic trading approach is. Yesterday, I highlighted CAT. I'd mentioned to you, I believe that this is a longer term breakout. Beautiful compression here. Earnings before the open there. Stock sold off a little bit, but the lower end of the compression was able to hold, and then boom. Now the stock is blasting through the upper end of the trading range. Go to the M5 chart. You can see on a daily basis that this stock has a lot of relative strength today. So the stock is moving higher even when the market has been down. You can see it's above the prior day's high. Look at that volume. That's exactly what we want. We want relative strength. We want stocks that are strong after earnings, breaking through horizontal resistance on heavy volume. Put all those pieces together and you've got the ingredients for a great trade. I think CAT continues to go higher for quite a while. So let's go back into that D1 chart. Let's take a look at the market. Very choppy start to the market right now. You can see that's the open. The first two bars today, long red bar followed by a bullish engulfing candle. Both of these were about 10 S&P points. So right out of the gate, I told members, hey, look at these first two bars. It's going to be pretty choppy out there today. So we test the downside, mixed candles, get a little bit of a bounce. Now we've got a rally. This looks pretty decent in here. 3 long green candles stacked one on top of the other. But given the context of what we've seen, lots of choppiness, I think we're just in for kind of a wild back and forth day. We have the unemployment report coming out tomorrow. We've already seen initial jobless claims came in today under 500,000, first time in many, many months, better than expected. That bodes well for tomorrow's unemployment report. ADP came out, 742,000 jobs created in the private sector during the month of April. Fantastic number. ISM manufacturing earlier in the week, ISM services yesterday, both super strong numbers. This economy is starting to come to a rolling boil. Everything looks great. Earnings, we have not seen earnings like this in over a decade. The margin of the beats has been unbelievable. 84% of the companies have exceeded profit estimates this quarter. And the margin by which they've beat has been about 24%. We haven't seen that type of number in a very long time. I believe the average for 5 years is about a 9% beat. So that gives you an idea of the magnitude of what's taking place right now. Now, bear in mind, the entire economy shut down for a year. So, of course, this is going to be a really big rebound. Much of that is priced into the market. If we take a look at what's going on in a daily chart, you can see lots of dojis. Well, what does that mean? That means that there's equilibrium. Buyers and sellers are paired off. The close each day is very near to the opening price. So we get a little bit of a range all day, but this is what I call a price compression. I do use my 10P indicator on a daily basis as well. You can see we had a big bullish cross down in here, which coincides right about here. But on a move of that magnitude, you would expect a big move in the market. But during the last stretch of this move higher, the market simply went sideways. So this could be telling us that there is some selling pressure coming up. We've seen a couple of dips, a couple of tails under body. When you have such a strong move like this, there are going to be buyers and the bid is going to be very resilient. So you get the drop and then boom, you bounce back. You get the drop and you bounce back. That tells me that buyers are still engaged, but the more we keep testing that bid, eventually you'll get bullish speculators flushed out and you'll get a little dip. It may not last more than 2 or 3 days. Most of the dips that we've seen this year have been very, very brief. Get one little drop and then boom, right back at it. Little drop, right back at it. But these little drops are very significant when you're a short-term trader with a 2 to 3 week time perspective. So we need to wait for this dip before we can start putting on bullish put spreads. Option implied volatilities are extremely low, so we'd have to sell those spreads right at the money to get a decent credit for them. So best to wait for that market drop. If we get through the next week or two and we continue to compress like this, I'm going to be ready to start adding bullish positions on the notion that all the gains in here have held. The bid is growing, 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 and buyers who are looking for that dip, just like I am, are going to get more and more anxious that it's not coming. So what does that mean? That means that they start getting a little bit more aggressive, just as I plan to do, and the bid starts moving higher until eventually, boom, you get your breakout. So the macro backdrop for the market right now, very, very bullish. We've got the Fed on the sidelines, got that FOMC statement last week. No bullish reaction off of that, even though the Fed said, no way that we're tightening until the job market improves substantially. They're looking for maybe 1 million new jobs tomorrow in the unemployment report. And if we get a number that's that hot, I have to wonder if TLT, U.S. 10-year treasuries, start to move lower. We'll see. They've bounced off the low here, but they're not able to keep going higher. So there is some selling pressure, and I think really strong economic news might cause some fear in the bond market that the Fed won't be able to hold off on tightening as long as it thinks it will be able to. We'll see. Tech stocks in the meantime have been super weak. Even though the market's not going anywhere, we are seeing incredible sector rotation. Basic materials, hot. Cyclicals, industrials, hot. Retail, pretty decent bid right now as well. You've got savings rates haven't been this high in a very long time. About $2 trillion sitting in cash on the sidelines, stimulus checks in hand. Some of that money is going to be spent in stores. Some of that money will find its way into the market as well. So those are sectors that you want to be in right now. The tech sector has been battered really hard, and we're finding unbelievable shorting opportunities right now on a day trading basis in the tech sector. But when you have this type of market strength, you don't want to be getting cute and swing trading from the short side, because snapback rallies are very, very violent. And in this case, we haven't even pulled back and we could shoot higher. So fairly risky to hold those positions overnight. I am longer term bullish. I'm just waiting for a better entry point. So in today's video, I'm still going to be focusing on stocks that I like that look like they are going to continue to move higher, so that if we do get this compression breakout, they'll be great. If not, you can watch these stocks and hawk them as the market pulls back. You want to see them tread water or even move higher. Then you know when the market finds support on a swing trading basis, you want to get long those stocks and you want to hold them for a few weeks. So let's take a look at what we've got. I'm going to go into my pop bull search, my favorite search. These are all gold related stocks, or in the case of VALE, that's an iron ore miner. I love that. You can see that breakout here. Really nice trend line here, horizontal breakout there. Checks that breakout right in there. Beautiful. Stock moving higher. Let's put up the major moving averages, 200-day, 100-day, 50-day moving averages. And you can see that the stock is clearly above all of those. Earnings after the close here, stock loved it. So the backdrop for any of the metals, aluminum, copper, iron, very strong as global economic growth is on the verge of recovering. So I like that stock. It's not going to be my pick of the day, though, although it certainly could be. I love what I see. Let's go into the 5-minute chart and take a look at the strength that we've had today. Look, relentless buying. Let's put up the SPY. And this is how you gauge relative strength. You can do an overlay in Option Stalker with the SPY. That's the gray line. You can also put up the 10SI indicator, which also measures relative strength. Orange line above zero, strong as heck. Market is the gray line. S&P down, down, down. Stock, nice grind higher, never looks back. That is the kind of stock that you want to buy when the market is down here forming support. When the market is down on the low of the day And you get a bullish 10P cross. This is a proprietary indicator we use right in here. Low of the day, followed by a bullish engulfing candle. We've got the 10P bullish cross down in here. This is where you want to be getting long about 40 minutes after the open. 40 minutes after the open. VALE, right in here. Ha ha! Breaking that downward sloping trend line, breaking through the high of the day. Yes, that is your entry point right there at 21.25. And now the stock is up about 40 cents or so. That's how we do it every day. So let's keep taking a look and see what else we've got. I'm going to go to a different search. All of these are gold stocks. Gold actually looks fantastic, but gold, I just can't seem to get a great feel for it. It looks great one day and then it looks horrible the next. You can see how it's moving higher. And let's put up the daily chart. Beautiful breakout through the 100-day moving average. You can see double bottom, higher low here. Low, higher low. Okay, that's a nice support level. We get through this horizontal resistance. It gets through the 50-day moving average. Nice. So, yes, gold looks good, but look at how choppy it's been back in here. Every time it looks good, it seems to fail. Is this going to be a great breakout? I don't know. That's the only reason that I'm avoiding it. For day trading, you betcha we are all over these stocks, and they've been coming up on all of our searches today. They've got fantastic relative strength. I'm going to go into my daily chart, and I'm going to go into heavy buying because there's a stock that caught my eye earlier today, and I really do love this chart. You can see in here, Costco really good, nice powerful move. Got almost a bullish engulfing candle that takes these three candles out through horizontal resistance. Yes, that's certainly a nice one. And I'm going to continue to go down the list because Cisco is the one that caught my eye early in the day. I love this downward sloping trend line here. This is a bullish flag formation. There's your flag. You can see how the stock has been able to move through it, but look at that price action. Here's the tell, just like we did with the other stock I showed you earlier, Caterpillar, or I can't even remember what it was right now, but market down, Valley, that's the stock we were looking at. Market down, Cisco up, holding its own. Massive volume. There's your tell right there. Big volume. Bid, 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 bid. We'll take all. How many more you got? I'll take every bit of stock you've got on Cisco. Please sell it to me. Uh-oh, there's no more sellers. Well, I'm going to grab what I can and I'm going to run with it. And that's the type of price action that you get. Relentless buying. This is a beautiful entry point, 51.50 approximately. You can see stock goes to a new high of the day. Right now the stock is up $1, which that's a huge move for Cisco. And these options have very low option implied volatility, so they trade at parity. You can buy a boatload of these options for dirt cheap. I like this stock for another reason. We know based on our statistical analysis that this company likes to rally into the earnings announcement. Hover over the E, it announces on May 19th. We're going to go into one of our swing trading searches and we'll take a look at buy into earnings. Hey, there's Cisco again right there. So we have taken a look at how the stock has reacted once it gets inside the 2-week earnings window. Once it's inside that 2-week window, more than 75% of the time over the last 3 years, this stock has had a tendency to rally into the earnings announcement. Sounds good to me. Couple of bullish hammers above the 50-day moving average. Buyers are in. Massive volume today. Downward sloping trend line breach to the upside. Stock extreme relative strength today, likely to challenge that all-time high. Love it into the earnings announcement. That's your pick of the day. That's how we do it. Market looking pretty solid in here. Lots of long green candles stacked. I don't know that it'll be able to get through this high at 417.60. Traders on the sidelines right now, waiting for that number to come out tomorrow on the unemployment report. Big news pending. Still some pretty big earnings overnight tonight. So I think the market is going to preserve that high right there, and given the early chop back and forth, I think that we're going to stay in the range based on the dojis that we've seen on the daily chart. Wouldn't surprise me if we close today somewhere around that 416 level. That's all I've got for you today. Please take a look at the previous videos, get a feel for this track record. I'd love to have you aboard. Thanks. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.